Welcome to this intelligence briefing on sovereignty for sale, why tech giants are negotiating with small nations. We will examine the migration of power from the capital city to the server farm. We are observing the rise of the subscription state. Corporations are becoming the quote-unquote anchor customers of entire nations by trading critical infrastructure for legal jurisdiction. Google's infrastructure spend alone is projected at $185 billion in 2026, shifting power dynamics from traditional trade to tech-state diplomacy. This is a digital land grab. Tech giants' infrastructure budgets now dwarf the sovereign wealth of targeted nations. The objective is physical territory for data centers and R&D zones. Small nations willingly enter these deals, seeking a shortcut to becoming the next global innovation hub. The evolution of corporate influence moves from lobbying to regulatory capture and finally to sovereignty bidding. In this third phase, corporate policies and private-public charters supersede local constitutional laws, replacing the traditional legal framework. The Cloud Embassy framework is a protected overseas data vault that functions as a sovereign enclave on foreign soil. These data centers demand diplomatic immunity over their physical campuses to bypass local laws and operate under their corporate legal code. This illustrates the anatomy of a digital jurisdiction. The physical server farm is within the host country's border, but operates inside a legally impermeable bubble. This shields it from local labor laws, citizen data privacy regulations, and corporate taxation. This is a high-stakes auction, a sovereign trade-off. Host nations gain infrastructure, GDP injections, and R&D status. In exchange, tech giants gain total legal immunity, tax exemptions, the bypass of restrictive labor laws, and ultimately, autonomous, sovereign territory. We are witnessing, quote-unquote, corporate governance as a service. Tech companies are contracted to manage essential government functions like tax collection and identity verification. This blurs the line, dissolving the distinction between a CEO and a head of state. This table highlights the paradigm shift to the subscription state. Rights are based on terms of service, not constitutional law. Revenue comes from ecosystem usage and data harvesting, and citizens are treated as users or subscribers tied to loyalty tiers for civic benefits. The Silicon Trap creates dependency as a service. Tech provides the incentive with capital and infrastructure, followed by integration, where algorithms take over government functions. This creates a dependency, which leads to vulnerability as the host nation loses leverage and is forced into perpetual concessions. The ultimate systemic risk is the, quote, threat of the corporate pullout. Unlike manufacturing, a tech giant's withdrawal is instantaneous and absolute. If a better deal is found elsewhere, the anchor customer can sever cloud access, collapsing a dependent economy overnight. Sovereignty traded for infrastructure is sovereignty permanently lost. Looking ahead to 2030, the future of shared sovereignty involves decentralized capitals and a necessary upgrade to the traditional nation-state model. A new framework, digital neutrality, is proposed to establish irrevocable rights for citizens across both physical and virtual jurisdictions.